Should we care about the fiscal cliff if you deal in precious metals? We'll be asking Peter Hug on For Pete's Sake up next. I'm happy to be back with Peter Hug by my side. Peter, nice to have you here again.
Thanks.
So Peter, I started off by talking about the fiscal cliff. Should we care if we deal in precious metals?
Well, I think if we go off the fiscal cliff, I think it'll have a major impact on the precious metals. I personally don't think we're going to face the fiscal cliff. I think Congress will come up with some way of extending it at least 6 months, possibly 9, until the new administration gets in and gets a chance to look at it closer.
So Peter, if you're not worried about the fiscal cliff, are you worried at all about the economic recovery in the U.S.? You must be.
Yeah, I still think it's sluggish. I mean, those numbers we saw last week at 7.8%, I'm not going to be in the camp of saying the government manipulated the numbers.
Are you pulling a Welch?
I'm not pulling a Welch, no. But, I think if you look at the underlying true unemployment numbers in the United States, if everyone was honest, they'd probably be up around 12 or 13%. Okay. And let's even assume that the number at 7.8% was accurate. The Fed has made it very clear that they're going to continue easing and putting liquidity into the market until the unemployment rate is well under 7%. So the feeling that the Fed is going to tighten anytime soon, I think, is misplaced, and I think that accounted for the profit taking that we saw last week in the metals.
Right. A lot of people were wondering how only 114,000 jobs added in September could have made that much of a difference.
Yeah, I thought it was all noise, but I think people looked at it and said, oh my God, the Fed doesn't need to be accommodative anymore. They're going to have to start tightening because the economy is getting better, and I just think they overreacted and took profits on their metals.
Okay, Peter, let's talk gold. I need to call you out on something.
Okay.
You said if we went to 1779, we'd go to the moon. Did you not?
No, I didn't say that. I got a few emails to that effect that I said it was going to the moon. I said if gold could close over 1779, and I had a number of questions as to what I meant by the close.
We'll get to that.
But if it closed over 1779, the next resistance level was 1820. And it did close over 1779. The market opened the next day at 1800, and then those unemployment numbers came out, and people got scared, thinking the economy was stronger than was first thought, and they sold the metals. But had that unemployment number come out at 8.2, we would have seen 1820, no doubt in my mind.
Okay, Peter, when you speak about a close, what are you referring to?
Yeah, people have asked me. My close is based on the COMEX close at 130 because that's where margins are calculated. That's where brokers get their notice. It opens, the market physically doesn't close, it closes and then reopens, but that 130 barometer is where I use for support resistance lines on my closing pricing.
Okay, Peter, so what new resistance levels are you looking at for gold now?
Well, I'm still bullish this market. I think there's the correction, but I think the correction is totally tied to the US dollar-euro rate. And if the dollar goes down below 130 euro, I think gold will take out the 1798 high. And if gold breaks down through 128, I think there'll be some more profit taking on the metals, and you may see gold down initially at 1740. But if you remember a couple of weeks back, I thought gold could correct all the way back down to 1640 and still be in a bullish uptrend. And you've got to buy these markets on dips. The medium to long-term potential for the markets are considerably higher, and everything the Fed and the Europeans are doing is constructive for higher metal prices.
Many analysts I've spoken to have said a $60 correction would not surprise them in gold.
Yeah, but what's a $60 correction? It's nothing, it's 4%. When you see gold rising from $1,525 to $1,800 in 5 weeks.
I'm not saying it's substantial, I'm just saying it wouldn't surprise them.
Yeah, but I think people get scared, and I think what you've got to do is really determine what you are as an investor. And if you're an investor that wants a percentage of your portfolio in metals, when the markets come down, you recalibrate your portfolio, buy more gold. If the markets go up and you've got more gold than you want on a recalibration basis, you sell. Okay. So you'll be making money when the market rallies, and you'll be buying at the lows when it dips, and you'll keep your percentage ratios even.
So gold has not made new highs in terms of US dollar terms. It has made new highs in terms of euro terms. You want to explain a little bit the philosophy behind that? Peter?
Well, I think, I was at a conference yesterday in Chicago, and, people were calling for numbers again of $3,000, $5,000, $10,000 an ounce. And yeah, it's possible. Talking about the US dollar not being a reserve currency, also possible, but I don't think in my lifetime. I'm 60. I don't think I'll live long enough to see a currency replace the US dollar. Certainly is not going to be the euro, which was the only candidate in my mind. And now they're talking about the Chinese currency replacing the dollar, and I think that is although potentially possible down the road, it's so far down the road, it's not even worth speaking
But
about.
Peter, given all the problems in the U.S., why are people still seeing the U.S. dollar as a safe haven?
Well, I mean, yeah, look at all the problems in the U.S., but I think the U.S. is on the cusp of recovering, whereas Europe is still on the cusp of falling.
Okay.
So their money is moving out of Europe and moving where? Where can it move? So
Right.
it's got to move somewhere. It's moving into gold to some extent. It's moving into the dollar, but it's also moving into strong resource currencies such as the Canadian dollar. But where else are you going to put it? You're going to put it in the Chinese currency? I mean, where all the restrictions are in place? There's no other place to be except in the dollar or in a hard commodities basket right now.
Okay, good thoughts. Peter, finally, let's look at silver. Some people I have spoken to have used the word bloodbath and silver in the same sentence, saying that we could see a major correction there. What are your thoughts?
Yeah, I mean, again, you have to look at it in relation to gold. I mean, silver went from $26 to $35. In percentage terms, that's almost 40%, a little more than 40%. Gold's move is about 20%. Silver will outperform gold on the upside and underperform gold on the downside. If gold dropped $100, for silver to drop $2.50, $3, absolutely.
Okay.
If you're a believer, though, that gold's going to be at $2,200, then you still want to buy silver relative gold at this current ratio price, because silver will be at 50 and gold will be at 2,200. You can work out your percentages. You'll see you'll be further ahead with silver.
And just quickly, Peter, earlier in the week, World Bank forecasting growth in China would slow down. My question to you is twofold. A, would this hurt gold, which is, since China is a primary buyer of gold, and B, does it hurt silver since silver is industrial metal? And if growth is slowing in China?
Well, I think China right now is the largest producer of gold. They don't export 1 ounce. They keep everything for internal consumption, and now they're also currently importing gold. They've made it open to their citizens to buy gold. If the Chinese economy slowed down dramatically, the only thing I think that would change would be some of the import of gold coming into China. Yes, on a net basis, it may have an impact on the gold price. If we go into a deflationary cycle,
Right.
where the dollar, I mean, everything gets hit at the same time, it's conceivable that people will run to cash and the precious metals will drop as a result. But the overall medium term is extremely constructive as long as the Federal Reserve and the Europeans continue to print money. And they basically said they're going to print money as long as it takes.
Peter, good thoughts. Thanks so much.
Okay, nice to be here again.
And thanks for watching this edition of For Pete's Sake. You can email both of us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.